Hello folks, my name is George Almodovar. I'm speaking to you from here, beautiful Kissimmee in Florida. I'm going to give you a real estate tip. Take advantage of it. You see this book here? It's called The No BS in Making Millions in Real Estate. If you haven't bought this yet, you're losing a lot of money. Let me give you an example. Let me turn to page 115. If you had a mortgage for $300,000 at a 6.5% interest rate, most people probably know that within 30 years you will pay in interest alone another $382,000, $633.47. In other words, by the time your term is up of 30 years, you will have paid $682,633.47. Okay? So not only do you pay the bank for your house, but you pay them an additional house plus furniture. Now, why is this important? You may know this as an amortization schedule, okay? But it's not. I did a graph here to show you what you actually pay out throughout the years. Now, why is this important? Because you're paying what is called compounding interest. Most people don't understand compounding interest. Okay, they understand the annual percentage rate. Let's say, for instance, 6.5% in this case, just for an example. But they don't understand the term interest rate. How does it apply? They don't understand that basically you are borrowing money and you're paying rent for the use of that money, which I call rent, which is interest. So most people are aware that if you pay bi-weekly payments, it reduces compounding interest. But some people assume that because they grab a payment and wait till the end of the year and then apply a whole month payment, that reduces the principal compounding interest. And they are misconstrued or misleaded. Because although that is true, don't get me wrong, I want you to understand something very important. You're paying interest or rent for the use of that money that you borrow every single day. It's called per diem basis. So though you might only pay that bill every 30 days, which is every month, you're being charged compounding interest every single day on the amount that you owe. So the quicker you reduce the amount that you owe, the principal, the more you save on compounding interest. Okay, thus, the more you reduce not only the interest rate, but the term of the loan. So there are ways that I show you in this book how to reduce the term of your loan, to knock it down to 7 to 10 years. The way you do that, and I'm not going to give you the full secret, you got to read the book, is you got to figure out a way that you can pay that mortgage payment every day or every week or every bi-weekly. Now, how do you do that? That's the key. The answer is right here. And I want you to remember this. Think about it for a minute. You get paid every week while you work. You're grabbing that money and you're depositing that money in a bank. It's sitting there. So you're working hard for money, but money is not working hard for you. So while that money's sitting in a bank account, the bank, believe it or not, is using those funds, lending it out to someone else, and collecting interest on that money, on your money, while you are barely making 0.25% interest rate, if that. Okay, because remember, there's a cost of inflation. Every year, the money, the buying power of that dollar is reducing. It's coming down. It's diminishing. It's buying power. So well, your money's sitting on the bank, they're lending out that money, and you're not making nothing of it. But you're being charged rent every single day. Right? Well, I'm going to show you how you could grab other people's money. I don't want you to overextend yourself. I don't want you to be over leveraged. There's ways to doing it. This is why you have to read the book. To reduce that compounding interest. So you are able to make that payment every day. Or partially. Reducing compounding interest, thus building your equity much quicker, paying down your principal much quicker, thus reducing your loan and your term. Okay, so I can't give you all the secret. I just gave you the idea, but there's a lot to it. How do you do it? How do you apply it? How do you make it happen? It's right here in this book. So if you have not read it, you're losing a lot of money. It's that simple. Okay, and not only that, remember, compounding interest is like magic, because the quicker you reduce that compounding interest, the quicker you can use that money to compound for your favor. In other words, you could borrow that equity, buy another property, then use that equity and buy another property, and you keep multiplying that until you become a multi-millionaire. But it ain't going to happen if you don't know how to use your money. So don't work hard for money. Have money work hard for you. And that's my tip for today. Thank you.